The British are coming or going. Hi, I'm Dean Jenkins with FollowMeTrades.com, and this is the weekly market update for the week coming up of June 16th, 2016. I think it's no small irony that as we approach the July 4th holiday and the celebration of American independence, one of the most famous quotes from the American Revolutionary War was Paul Revere saying, "The British are coming, the British are coming." And what really has us in the markets on edge right now is the specter of the British leaving. Leaving the European Union and what's called Brexit, and that vote is coming up on June 23rd, so next week. As we look at the economic calendar for reports coming out next week, it's a pretty light week. We got existing home sales on Wednesday, jobless claims on Thursday, new home sales Thursday as well, and then durable goods on Friday. But I think all attention is going to be on the vote in Britain on whether or not to stay in the EU. That's going to dominate the headlines and market emotion, at least for this week. And currently the probability, the odds based on surveys and all that stuff, about 36% that they would, or 64% that they won't. Here's a pretty good article in the Financial Times by John Authors, and he makes a comment here that I like. It says, causation is maddeningly difficult to ascertain in markets. Well, a truer statement was never made. What is the cause of either the market going up, the market going down, or the market doing nothing? And it's complex, and assigning causation for it is maddening. But we don't have to. We don't have to stand back and understand why the market is doing what it's doing, because we can trade according to what it is doing, and that's a reality. It's indisputable, and that's how we base our trades. But it is interesting to follow the news, know what's going on, what's coming up, and what may cause volatility. And this upcoming Brexit vote next week is certainly going to cause uncertainty and volatility, and the market just hates uncertainty. That's absolutely true. The market hates uncertainty, but the truth is, it always exists. The illusion of certainty is pretty fleeting, and again, it's an illusion. And the best we can do is trade with the realities of price action in the market, and that's what we're going to do here at FollowMeTrades.com. I'll look at one more thing here, and it's just fun. This doesn't drive our trading, but it's fun to watch and keep in the back of your mind. So here's a fear and greed index from CNN, and right now it is neutral, and that's pretty interesting. And if we look down historically, because it wasn't very long ago that we were hitting some really high extreme greed levels. Look how sharply this has dropped off in the last few weeks. And when's the last time it dropped off like that from an extreme greed level? Into last year, when the market went down significantly, and last summer when it dropped significantly. So is this a leading indicator? I don't know. We'll see. It certainly is worth watching. We don't trade based on this. This is speculative. It's unsubstantiated observation. The only thing we can observe is the reality of price movement. But if we have an idea that it's coming, that can be helpful. Let's go ahead and look at the charts, the markets. So this is the S&P 500 on a daily chart, and we are currently in a bracket. It's defined by these purple lines, the lower one and the higher one. Some people call that a channeling market, a bracketed market, a sideways market. Whatever term you use, it's not trending. It is not trending up, and it is not trending down. Now, last week I said when we put in this high here, and we took out this high here, that the probability moved toward putting in more highs, and that's still the case. I don't like that. The market's not doing what I want it to do. It's doing what it's doing, and I have to respond to that reality. I say I don't really like that, because if we go put in a new high, I think it's not going to be very meaningful, and we really just have to sit and wait it out. And the real dramatic move is going to come someday when the market corrects, and I'd rather that just get started. That's a lot easier to trade, and we can make some really good profit on it. But again, the market didn't check in with me on what it should do. It's going to do what it does, and I have to respond accordingly. Now, I say we're in this bracket. It's interesting. We had a very similar, if you look here, similar range. So we're in a 95-point range in this channel that we're in right here. Very similar last February through August before it broke out. And I believe whichever way we break out of this channel is the way the market will go for a while. So if we break up and put in new highs, that's going to be the trend for a while. And depending on the vote next week, in Britain. That could cause a little minor rally. We could break out to the upside here, maybe put in some modest highs. If regardless of that vote, if the market ends up trending down, taking out this bottom, then that could mean that the bear market has started and is going to get underway, and we're going to get another one of these kind of dramatic moves. So right now we're stuck. This is a tough market to trade in, and so we have to be really, really careful and only take the absolute best trades, ones that are not really associated with the indexes, but ones that are in sectors that do have clear trends, and that's what we're doing. So by the update for next week, we'll probably see something, we'll know about the Brexit vote, and we may see a trend develop. But we'll wait and see, and we'll give that update. Meanwhile, let's take a look at gold and oil like we do each week. Here's gold, and it's easier to see what's going on a weekly chart. So again, this is a weekly chart. Every price bar represents a week. Now, we had said that when gold crossed this 1113 level, that the recovery in gold, this corrective wave up, which is a wave 4 in Elliott wave parlance, this is wave 1, 2, 3, and now we're going up into a 4. And the target range for 4 is 1347 to 1532. This is still very much intact. And so we had a little minor pullback that on the daily charts looked like a little wave 4. It met all that criteria. Really looks like we're going to continue on up now into this target range. Could take time. Again, this is a weekly chart, so it's moving fairly slowly. But we're still very bullish on gold, and we are taking long gold trades in my stock picking service now. Similarly, let's look at oil on the weekly chart just to get the bigger picture. So oil came down from over $120 a barrel down to about 30. We had said at 37.09, it definitely had put in a bottom and was starting, again, a corrective wave. And this is a big wave 3, and so we're looking for a wave 4 up into the $63 to $83 a barrel range. Now, it won't go straight up. We've had a little pullback here, but it will continue making higher highs, higher lows, higher highs, higher lows through this year into next year. The high probability is we get up into this target range for oil. Unchanged so far, and again, we're trading according to that. Well, that's it for this week. It'll be really fascinating to see what happens with the Britain vote and how the market responds, and we'll be able to give an update on that next week. So stay tuned, and we will be back. Take care until next time. Thanks.